Welcome to Stocks in Translation, Yahoo Finance's video podcast that cuts through the market mayhem, the noisy numbers, and the hyperbole to give you the information you need to make the right trade for your portfolio. I'm Blikre, your host, and with me is Yahoo Finance senior reporter Allie Canal, who's here to connect the dots and to be that bridge between Wall Street and Main Street. With the big Bitcoin washout recently, we're going to be digging into all things crypto with a special guest. In our phrase of the day, on-chain, because this cycle isn't just about prices, it's about what companies and investors are actually doing on the blockchain in real time. And for market show and tell, we're going to be tracking Bitcoin's RSI, or Relative Strength Index, which just swung from too hot to too cold. A clean way to see who's buying the dips and who is tapping out. And this episode is brought to you by the number 5%. That is our guest call for where unemployment could land in 2026, especially for younger workers navigating the AI job shakeup. And today we are welcoming back Zack Guzman, who is the founder of the Web3 media startup Trustless Media and host of Coinage, a community-owned crypto show built around on-chain governance. Perfect. He is a former Yahoo Finance anchor and longtime crypto reporter, and he's been early and loud on how digital assets, tokenization, and community ownership are reshaping finance and media. So, Zack, we got to start with the elephant in the room. Big crypto sell-off here.
Yes.
You buying the dips, or are you thinking, oh, another crypto winter?
Nah, I mean, this one's a little bit different, I think, than structurally some of the other crypto winters we've seen in the past. So first off, it's good to be back on Stocks and Translation. Jared and Allie, good to see you again. But I think vibes-wise, obviously, there are always tremors. I think this year's been a very long year for crypto. We started the year with the Trump meme coin and all the excitement around, oh, wow, we got a president who understands this stuff, to, hey, wait, does he really understand this stuff? To where we are now. And I think, we're seeing some of the fears trickle in around strategy and what Michael Saylor's been up to in building Bitcoin treasury companies and the copycats and the like. But generally, I think I would be buying this dip, Jared, if I can give you a real succinct answer.
Yeah.
I think some of these fears are a little overblown, as we'll get into today, but I think we're finding some footing here.
What do you think is contributing to the drop in sentiment? And we heard Michael Burry, a famed big short investor, he said that Bitcoin is essentially worthless. So what's your response to his comments and really how that's contributing to the overall retail sentiment right now?
Yeah, I mean, I think we've heard, obviously, what is this? For me, I think it's like my fourth cycle, Jared. I know you've been focusing in on crypto for a long time, too. We've seen a lot of people say Bitcoin's worthless when it was $400, when it was $1,000.
Even Jamie Dimon at one point.
Exactly, and look at what's happening now.
Wall Street across the board seems to be embracing.
Exactly, and so you can take certain, skeptics out there and you can try and focus on what they're saying. But generally what we're seeing is that trend, Allie, is more and more Wall Street giants, Vanguard, for example, just coming out huge 180 saying that they never wanted their clients to get involved with this stuff, now offering access to Bitcoin ETFs, Ethereum ETFs, Solana, and Ripple. So I think we're seeing a huge kind of shift in that take being more of a minority than the majority.
All right, now time for our phrase of the day, which is related to all of this stuff, on-chain. And this one matters because more of the crypto story is now unfolding in public right on the blockchain. When something is on-chain, it means the activity is recorded directly on a blockchain, a transparent, permanent ledger that shows money flows, ownership changes, and network usage in real time. Think of it as moving from back-office bookkeeping to a glass-walled showroom. And in this cycle, what companies and investors are doing on-chain is becoming just as important as the price charts themselves. So, Zack, you've been pretty vocal about that, especially around Coinbase's recent moves. So what are your thoughts broadly on the on-chain?
Yeah, I think obviously, Coinbase is a giant in the space. If you look at the stock, it's been pretty flat this year relative to some other players. I think we can get into the comparisons to Robinhood. Which is up drastically on the year. What is it? More than 250%, I think.
Like that.
So, I think right now, Coinbase is making this huge shift to really leaning into not just being a crypto exchange, but doing all of these things on their own Ethereum layer 2 on Base. They also made a big shift themselves, so it's not just Vanguard, but even within the on-chain space, Coinbase had for a very long time said they were going to launch a token for Base. And just a few months ago, they also had their big about face in saying that they might. So I think right now, a lot of people are overlooking what that means for Coinbase, what it means for a company like that that can start to make fees off of their own chain. So if I look at the comparison to Hood and Coin right now, I see a huge kind of misunderstanding of what's happening with what Coinbase wants to do in not just being an exchange, not just being the custodian for a lot of these Bitcoin ETFs, but now really doubling down on what they can power on chain, whether it's prediction markets, whether it's on-chain equities, all kinds of different things in the tokenization world, including what we're doing at Trustless, which is kind of tokenizing the upside in creators. And so I think we're kind of just at the beginning of this chapter of what can be built on-chain.
Talk to us about what you're doing at Trustless Media. I find this fascinating because I think you're leading the way here, and maybe this is a model for the future, but just try to tell us how you've embraced the crypto world and a lot of these technologies that we're talking about here.
Yeah, I mean, I think, just to stick with Coinbase, I mean, Zora is one of those projects that has offered basically a launch pad for people to launch their own tokens and tie it to a Web3 version of Instagram so people can post content, people can trade content all on chain. And there are questions about how sustainable all of that is when it's not tied to anything real. But for what we're trying to do is, legally tying the upside in a creator. So someone who might be on the rise, maybe they're not an A-list celebrity that Allie is going to be covering on Yahoo, but they might be kind of an earlier on TikTok creator. And you might see talent there. And so what we've basically pioneered is the idea of buying into an up-and-coming creator, or what we've done at Coinage, letting anyone buy a share in a community-owned media outlet and grow with it over time and earn dividends from it. And so I think there's a lot, once you start to power sustainable dynamics like that are a little bit more realistic, shall we say, than just the meme coins that came in the past. And so there are a lot of different experiments. What we're doing is just one, Zora's is another, and from what I've seen, Coinbase is really trying to figure out which one of those are going to be around in the long term and doubling down on those.
As we all are.
Yeah, and I think that speaks to just a community aspect overall in the crypto space. Like the crypto community, I feel like, is strong and fierce. But we were just talking about, a phrase of the day, on-chain. Then there's blockchain, stable coins, tokenization. There's all these buzzwords within this space, and it can be a little overwhelming for someone that maybe doesn't know crypto that much, hasn't been following it for as long as you.
Yeah.
What would you tell people that maybe are curious about crypto because it's becoming more part of mainstream media, more part of the Wall Street vernacular, that maybe don't fully understand it yet?
For sure. I mean, I think, just look at the last 3 years, right? It had gone from, people
almost
only
full wipeout.
Yeah, I mean, the FTX collapse obviously was its own thing, but the idea of kind of where Wall Street has gone beyond just kind of like investing in the story of digital gold, which is all Bitcoin kind of has kind of elbowed out its own little narrative. But now as we're seeing kind of real world assets, tokenization, as you're talking about, I think the whole industry and Wall Street as well is asking, all right, where is the real opportunity here? Is it going to be in simply tokenizing existing stocks, which may be lucrative for some people, but for the average investor watching this show, it might not be any different for them because they can already trade stocks if you're here in the US. So I think really now we've kind of evolved into a new chapter, so to speak, where I'm excited about assets that couldn't have existed before without a blockchain, like the glass showroom you just mentioned, Allie, is now you can kind of issue tokenized things individually. You don't need to go the full IPO route anymore. And that's what we're seeing work through DC, the rules and regulations around what that looks like. If you're not going to go through kind of an SEC registered listing anymore, if what we're doing in co-ops is now allowed too, what does that enable? Suddenly any business can kind of start to offer some upside in what they're building and lean into the network effects and community that you just mentioned. So I'm excited about where kind of that wake-up call when it happens, because I think we're still very early in that. And that's why I think, whether it's a Coinbase layer 2 or wherever all these assets eventually trade, there is still huge upside there to be discussed.
All right, hard pivot here. We got to talk market technicals because it is time for market show and tell. And we are breaking down the Relative Strength Index, or RSI, one of the simplest ways to see if an asset looks overbought or oversold. RSI tracks the speed of recent price moves, and when it pushes above the 70 level, traders say things are getting a little bit too hot. And below 30, it's a sign that the selling may have gone too far. So Bitcoin's RSI just made a full swing from overheated levels earlier this fall to flirting with oversold territory as the latest pullback shook out the fast money. So that kind of snapback tells you a lot about who's buying the dips, who's backing away, how fragile the sentiment is beneath the surface. So what do you see in Bitcoin's momentum right now in the RSI?
Yeah, I mean, RSI is a good part. First of all, I like the structure of the show, I got to say, in terms of digging into the explainers here, because I think RSI is a good metric. The other one, too, is the fear gauge, somewhat similarly related. And we just hit, I think, a low on the year just a couple weeks ago in terms of extreme fear right now. And I think when you weigh in why that's happening, obviously, sometimes the catalyst that got us to the record highs of about 125 those evaporating obviously are going to swing back to the downside, which is why we saw about a 25% decline since the beginning of October. But I think we're finding our footing here to the point of the RSI reading. I think we're finally in that territory of those fears being overblown around strategy and some of the sell-off. So I would say this is why I'm optimistic and bullish here as we've kind of seen that pullback. It's not different historically than what we've seen in the past too. Even in a bull market, you can start to see some pullbacks like these. 25%, honestly, kind of modest by Bitcoin's historical measures. And if you're seeing a reading like this where things are overblown, I think it's healthy to start making some bids here.
I got one more question before we go to break. Got about a minute here. Just thinking big picture, and this isn't on technicals. We came into this year and found out we have a very friendly crypto administration, which was a surprise. But Bitcoin, the gains this year were quite a bit less than I would have expected, given the backdrop. You just mentioned that Vanguard is now changing its colors, its stripes, allowing crypto onto its platform. So when do we get that big rush up where we talk 2x, 3x, 4x in a year?
Obviously a year is just 1 year. If you back up and look at the picture, we're up still pretty considerably since that last collapse we were all talking about in 2022 when Bitcoin was just 16,000. So if you zoom out, still kind of in the same trajectory of, look, this is still an asset class.
Question of timeframes here.
Question of timeframes, I'd say. I'd say we zoom out and we're looking at a chart like that. But still, Jared, there's still a lot more excitement now that Vanguard is flipping that switch.
We need to take a short break, but coming up, we're talking Zack's unemployment forecast for 2026, plus a runway showdown to determine if gold will topple Bitcoin next year. Stay tuned. Well, this episode is brought to you by the number 5%. That's Zack's call for where U.S. unemployment could land in 2026. So, Zack, you're zeroing in on that stress for new grads. And we've heard that it is harder and harder for college-educated young workers to nab that first job. And there's been talk that maybe that's AI, maybe it's something else going on. So why the 5% call?
Yeah, sometimes people forget. I'm not just a crypto guy anymore, right?
You're an economist.
Yeah, we forgot what we used to do here at Yahoo. But
Many
no,
hats.
I think in general we're seeing kind of the early pieces of this, right? And it might just be anecdotal right now, but I think in general, the earlier workers in their life cycle, their employment journey, are generally getting replaced first by all of this. And I think if you look at the data and just look back a year ago and the spread between people who were under 25, the unemployment rate there, versus everyone above that age, spread was only about 4%. Now it's up to 6%, just comparing that on a year-over-year basis. So I think we're seeing the early innings of that. We've even heard, I think Fed Chair Powell kind of get asked about this by Brian Chung, former coworker of ours too.
Finance anchor.
So I think it really is just kind of like the early innings of, I think, seeing some of that play out, which worries me because, again, you can hold me to 5% next year. I don't know how realistic any of the government data, not getting too political here, but I think it is something that is worrying a lot of people because that is a very vulnerable workforce. We see it time and time again when things start to turn. It's the younger employees, it's the minorities, and the unemployment rates that we see kind of spike first. So it's just something to keep an eye on, I think, as we move forward.
And it's a ripple effect too when we think about the affordability crisis and how a lot of people out there can't afford homes. And what is the long-term impact of that if you have home ownership that declines significantly and the American dream is essentially gone? I mean, it's one of the reasons why President Trump was elected, because of the affordability crisis. You can argue that's why Zohran Mamdani was elected here in New York City, the first socialist mayor. So there's a lot of different forces at play when we talk about the economy.
Yeah, and we just put out a piece on that too in terms of looking at kind of why a lot of people, myself included, got excited about crypto and community ownership and putting this on chain. And a lot of what both Trump and Mamdani talked about is kind of if you feel like you're being left behind by the normal economy, what else is there? Alternative assets were kind of the escape chute, the life raft for a lot of people who felt excluded. And so I think it is a very interesting thing to see crypto somewhat co-opted now by Wall Street, and now maybe that doesn't exist for younger people.
Nevertheless, I've read your words here in your notes here that you do believe that crypto asset prices are somewhat tied to Fed interest rate expectations, and that just means that there's been this tremendous Wall Streetization, if that is a word. It's gone mainstream, and so we see crypto assets responding to the same thing that stocks do. Tell us about that relationship right there and how you see it.
Yeah, I mean, it's still historically true that Bitcoin is generally an interest rate sensitive asset, right? And so if it is true, and we just saw this kind of play out over the last few months and why Bitcoin did start to fall off was that the expectations for a December rate cut fell off a cliff. And you would have expected as those kind of came back up to around 90% that you would have seen Bitcoin rally. It didn't, which to me, I think points to the overhang with strategy and the fears there kind of still being what is the catalyst for the persistent sell-off. But I think moving forward, as we get back to kind of the interest rate discussion past whatever the Fed chooses to do in December and look ahead to next year, we saw JP Morgan kind of also flip-flop on whether or not there'd be a cut. And I think looking ahead to 2026, if Kevin Hassett's the guy, if Trump's putting him in lower rates, continued generally a positive catalyst for Bitcoin there too. So I think structurally, people might not want to believe it. We've seen predictions for Kevin being the guy come up. Huge over the last couple of weeks on all the betting prediction markets.
Poly market right here on Yahoo Finance, yes.
Yeah, so I think, if you put those pieces together, generally looking forward into next year, people might still be underweighting exactly what's coming on the interest rate side.
Talking about prediction markets, we've been hearing a lot more talk about the future here, and we were just talking about Polymarket. There's Kalshi, and Coinbase might be launching its own prediction market. Do you think there is any dangers within the rise of prediction markets?
Ethically?
No, just systemic.
I think, it is interesting to think about turning everything into a market, right? And we've covered this at CoinEdge too, the idea of tokenizing everything, financialization of everything. Does it lead to negative societal outcomes? If you think about Facebook back when their IPO was, and
nobody was asking that question.
Nobody did. And nobody really thought about it, what it would mean if we were online all the time, right? And now think about what people are saying about shifting and getting rid of iPhones to now have dumb phones because of the impacts that we feel. So I think it's kind of a similar thing where it's people aren't asking enough of those questions. However, I would say there's still a lot of money to be made, just as it was true when Facebook was launching, that we're very early in that. And so I'm in the camp that maybe Kalshi and Polymarket might not have as huge of a competitive mode as people think, which is why it's very interesting to think about Coinbase leveraging the distribution power that they have, and right now kind of working with Kalshi and getting their own markets off the ground. But I think increasingly, if you're the behemoth like Coinbase and you have all the users yourself, to me, it would seem like they've got a huge announcement coming up mid-December. I'm going to be very interested to see kind of what they say about the partnership there and what their plans might be to move some of that onto Base and their own chain.
Yeah, I think a lot of people would be interested too in that announcement. Got to do another hard pivot because we've got a markets take on a classic Hollywood gab show staple. Who wore better? And today's runway showdown is a battle of the havens, the timeless yellow metal versus the digital upstart trying to catch the lead. On the left catwalk, we've got gold, the veteran-style icon, walking with a polished old-world look. It's been setting the tone all year, hitting record highs and showing the kind of seasoned confidence that often leads the rest of the market. On the right catwalk, we've got Bitcoin, the flashier, high beta trendsetter, cutting a futuristic silhouette with bold lines and a faster stride. It may trade with more drama, but it hasn't produced the returns anything like those of the barbarous relic this year so far. So, Zach, the question for you is, looking ahead to 2026, who's really the haven trade here? Is it the classic gold standard or the digital model chasing it down the runway?
Yeah, it's a good question. I think in general, what we've seen historically is gold is usually kind of the precursor to what happens with Bitcoin, right? So usually you'll see kind of gold lead the charge and Bitcoin kind of catch up over the ensuing months, call it 3 months, generally has been the lag. And so if you consider how strong of a year we've seen with gold up more than 50% this year, and Bitcoin essentially kind of, certainly not there. I think if you fast forward to 26, maybe that would be the time. Generally right now, which is why I've said what I've said on this podcast here today, is that I would be more in the bullish camp because historically, you'd expect to see Bitcoin have a stronger follow-on.
Want to ask you about strategy because MSTR, that is a big overhang for the market. How do you think this plays out in 2026?
Yeah, I mean, Julie just walked by. She's been chatting with Michael Saylor a few times.
True.
I always like watching her interviews and just had Fong on. So I think in general, people, again, are waking up to everything you just said in comparing gold to digital gold and what Bitcoin can start to unlock, whether it is kind of on-chain lending, which we're seeing a huge boom in right now, and also cross-border payments, which is also interesting when you start to think about some of the things that strategy could get into. And so in general, I do think we're still extremely early in recovering from some of those fears. When I left Yahoo Finance in 22, it was right around the time of the Terra collapse. The Terra collapse was huge. And again, similar dynamics at play in terms of death loops and people thinking about leverage and what happens if you have a huge move to the upside. caused by strategy? Could you have a huge move to the downside? I think a lot of that's overblown, just kind of generally what I know about strategy. And it's been interesting to see people kind of dig into how it works. But in general, I think we're seeing that right now is people moving beyond those fears and optimistic that that's going to continue.
In 2022, it wasn't just Bitcoin that was pummeled. It was also the tech industry at large, big tech.
That big bear market in stocks.
Exactly. And how do you view crypto at this stage of the game? Is it still trading in lockstep with tech? Is it risk on? Is it risk off? How do you view?
Yeah, I think we're seeing a huge bifurcation in the Bitcoin story. And even the Bitcoin story, as we said, is kind of like this hedge against inflation and trading in lockstep with gold. Generally, you can poke holes in that one all the time.
Yes.
But we're seeing a huge kind of break now. And Cathie Wood was just talking about this too, in terms of why she actually dropped her Bitcoin forecast because stablecoins have taken off. And so we're kind of seeing investors wake up to, all right, again, where's the opportunity here if, stablecoins are going to be a thing, if tokenization and moving things on chain is going to be a thing, if Bitcoin's going to be its own thing over here and then everything else in crypto, like where do those opportunities, the investing opportunities start to kind of pop up? And I would say that generally the best name that's positioned to capture most of that is Coinbase. And it's still crazy to think that the stock is below where it IPO'd, but that is still what we're seeing here. And I think as some of the retail excitement, to Allie's point, kind of dries up because other things in crypto, again, that bifurcation happens, maybe that's not going to come back. But everything else that they're betting on, I think, is still has a lot of potential.
And real quickly here, Zack, Bank of America just came out saying that they recommend 1% to 4% allocation to crypto. What are your thoughts on that and sort of the Wall Street firms making these calls?
Yeah, I mean, I think obviously, again, let's just step back and think about what that sounds like when you have a name like that recommending anything. It wasn't too long ago that everyone would have been sitting at this table saying Bitcoin's a scam, right? And we're still hearing that from a lot of smart people. So I think you do need to appreciate how far we've come when we hear something like that. I think my general advice, which is always dangerous to give, is that it very much depends on kind of what your investment goals are. If you're a younger investor out there, you've got a longer time horizon, you really can be in the HODL camp. If you're trying to be more of why Saylor and why even Cathie Wood, Tom Lee, these big names like this asset, is because increasingly, I think, we'll see it break from the correlation to everything else, and having a little bit of that upside is helpful to a portfolio.
Thank you for that. Great to see you again, Zack. And real quick here, on-chain. I think we broke that down pretty well. The big question on everybody's mind, what happens to Bitcoin here? Is it the buy the dip time, or is it that crypto winter? And my 2 cents here, you got to watch 75,000. If that cracks in a meaningful way in Bitcoin, then we might have that crypto winter. Until then, well, guess what? I think it's time to sign off. So we'll just do that. We are winding things down here at Stocks in Translation, and we'll see you next time.